IG Live talking about investment income. Tax season approaching. We're about 45 days out approximately for tax season. Big refunds, big tax filing in regards to saving money on your tax liability. But we're on now talking about investment income and the new IRS regulations that's a benefit for those that receive investment income. And of course, investment income is interest, dividends, capital gains. So anybody out there that's receiving interest on an investment that you made, I'm gonna give y'all the new rule that's extremely beneficial, that can earn you earned income credit. We're gonna break down what that means in regards to earned income credit. So we're gonna give you the breakdown. All right, so y'all on with Tax Pro free. Be on the lookout for my new ebook. Click the link in the bio. We're giving up a lot of powerful knowledge in regards to taxes, finances, credit, if you will. You know, I don't really get too much into the credit aspect, but there's knowledge that can be shared. However, we're on talking about investment income and how that relates to EIC, or the correct term EITC. That's earned income tax credit. A lot of people that file taxes may not understand where do you really get your tax refund money from. The bulk of your tax refund money comes from what is called earned income credit or earned income tax credit. Okay, that is a tax credit where you get really most of your tax refund from. Okay, you can also get your tax refund money from dependents, be it a child or a other dependent, because a lot of people think a dependent that you're claiming is just a child, but also there can be other dependents that fall under a dependent credit. So different credits that you get when you're getting a tax refund. Then you got some people that don't get tax refunds. They're like, hey man, you know, I've been out of getting tax refunds for years. I make high 5 figures, 6 figures, 7 figures, so I don't get a tax refund. That's okay. So you get what is called a tax liability, which you owe taxes. But when you come to someone that has the proper knowledge and the thorough knowledge, then it's our job as tax practitioners to bring your taxes down, where you are paying less in taxes. That's called paying less in your tax liability. So we're on now talking about investment income and how you can benefit from your investments that you make, and it can bring you back either lower tax liability or can bring you back a tax refund. So what is investment income? Investment income is income that is received from investments that you make. Okay, and it falls under interest, dividends, and capital gains. And what is interest? Let's say, for instance, you invested in an apartment complex, you invested in a rehabbed house or some type of real estate, or wherever you have investments at that is bringing money back in interest. Then of course you can file that interest money that you're making. You file it on your taxes, but it's a way that you can receive a tax refund or lower your tax liability with that investment income from interest. Also, you have what is called dividends. Dividends is if you're part of a corporation, you got stocks and different things like that, and you get a portion of that company's or that stock's profit. That's called dividends. You can take that dividend money and also get a tax refund from that dividend money, or you can bring down your tax liability as well. And then you have what is called capital gains. Capital gains, simply put, is assets that you sell and you gain money from those assets or profit for those assets that you're selling. That can be a capital gain. Capital gain is also stocks, real estate, mutual funds, bonds, etc. Okay, capital gains. Now, what it is the IRS has a clause, if you will, that if you are claiming below $3,650 in investment income, then you can qualify for earned income tax credit. Let's break that down. What do we mean? Okay, so someone has investments out there and you're getting interest on your investment. You're getting dividends, profit from your dividends or capital gains. And it's $3,650 that you can actually write off in your taxes, file it in your taxes, and you'll get earned income credit based on that $3,650 or below. But what the IRS has done for the 2021 tax filing year and season, they added another, and they increased it another $10,000. How about that? Now, what does that mean? That means instead of the usual $3,650 that you were able to claim and qualify for earned income credit, now you can claim up to $13,650. Let's break that down. And what does that mean? So this is how the earned income credit table works. Earned income credit is a credit that the IRS gives people that earn income. I like to break things down in layman terms where a baby can understand it. I commend all my people out there that, kind of, you break it down. I'm not going to say educational wise, because it's always great to have knowledge. It's important to have knowledge. But nonetheless, I like to break things down in layman terms. However, with that said, the way that it works is this. The IRS has a tax credit called Earned Income Tax Credit. And it's for those that are in the workforce, in the free market force, whether you have your own business, etc., making investments, and you get a credit, which can give you money, which is a tax refund, or can actually lower your tax liability as well. So the way that they have this earned income table set up is, if you have 0 dependents and you are filing income from about $21,000 to $27,000. So if you, let's say you're single, you don't have a spouse, or you're not filing a joint return, and it's just you filing your taxes, and you made a gross income for the year of about $20,000 to $27,000, really $21,000 to $27,000, and you claim that $21,000 to $27,000, and that money is earned income. That's how you get earned income tax credit. What is earned income? You can earn income on a job where you get paid. You can earn income in investing, and you get interest off your investment. That profit becomes earned income. So any income that you're earning, you're self-employed, you're an entrepreneur, you got a side hustle, all that is earned income. So you take that income, and if you earned it from $21,000 to $27,000, you can qualify for about $1,500 in earned income credit. That means that the IRS is going to give you, and through your tax filing, you can get about $1,500 just on earning from $21,000 to $27,000. Okay? You can get that back on a tax refund. So anybody that's in that tax bracket of $21,000 to $27,000, and you go to file your taxes, you say, hey, I want to file my taxes. I made $21,000 to $27,000 for the year, and I have 0 dependents that I'm claiming. Then you can get back about $1,500 in earned income credit, and that becomes a tax refund. Or you have investment income. Investment income is income that you're investing, money that you're investing. Hey man, I want to invest in some stocks, some shares. That's called dividends that you'll get in profits. And if your profits of dividends or interest or capital gains is $3,600 or less, then you actually can claim that $3,600 or less on your taxes and get earned income credit, which is money from you claiming that $3,600. But however, like I said, the IRS has expanded that to $13,000, an additional $10,000. So now your investments your interest that you're getting off your investments, instead of claiming that limit of $3,600, you can claim up to $13,000 and get earned income credit from that $13,000. So if you're earning $21,000 to $27,000 with no dependents, your earned income is about $1,500. If you're earning about $42,000 to $48,000 for the year, and you have one dependent, let's say you have a dependent, then your earned income that you can get is about $3,600. Now I need y'all to follow me, because this is how you get your tax refund. It really comes from your earned income credit. It comes from other credits as well. Educational credit, dependent credit, other dependent credit, refundable credit, non-refundable credit. all those things tying together. But your earned income credit is the bulk of the money that you get when you get a tax refund. And your earned income credit can go from $0 to like $6,700. There's a scale, okay? From $0 to $6,700. You can get an earned income credit. That's money. Because a lot of people hear earned income credit and they thinking it's a credit. It is a credit, but it's a refundable credit, which is actually cash money. You understand? That's how that works. So when people are getting tax refunds, they're like, wow, you know, I went and filed my taxes and I got a tax refund, not understanding that the bulk of that tax refund money is earned income credit. And the earned income credit goes from $0 to $6,700. And if you go to the right tax practitioner, that means they can get you with their knowledge between $0 to $6,700 just an earned income credit. That don't have anything to do with the other credits that can have your refund go higher and higher, above $10,000 in a tax refund. Or if you're not getting a tax refund because you are in another tax bracket where you have to pay taxes, then the correct tax practitioner can bring down your tax liability, which means money that you owe the IRS. That's a tax liability. So for the most part, that's where your earned income credit and the knowledge of earned income credit comes in at. Okay, I share additional knowledge in regards to taxes and finances on my YouTube podcast. Okay, check me out on YouTube, Black Dollar TV. Subscribe to my YouTube, Black Dollar TV. Okay, a lot of knowledge that I'm giving up on my YouTube channel as well. Again, subscribe. And by the way, I just launched my YouTube channel a couple weeks ago. But subscribe. I got a lot of content coming out, a lot of tax knowledge, a lot of financial knowledge, a lot of entrepreneur knowledge. I do entrepreneur training. I do marketing, consulting, all of that. Okay. But check me out. Click the link in my bio. It's a lot that you can see, okay, about myself. But nonetheless, we're talking about investment income that you can claim on your taxes. Those that invest in themselves. And there's a lot of benefits that can happen. And the IRS just expanded it for the 2021 tax year and tax season. It went from $3,600 to $13,000. I'm just giving approximate numbers that you can actually claim on your taxes from your investment income. So I was on, if your income is about $42,000 to $48,000 for the year and you have one dependent, then you qualify for about $3,600 in earned income credit. If your income is from like $47,000 to $53,000 and you have two dependents, then your earned income can go up to like $5,900 in earned income credit. If your income is from $51,000 to $57,000, then your earned income credit can go up to $6,700. And again, what does that mean when I say your earned income credit? It's really like free money. Just to say it in layman terms. It's like free money. And I always say nothing free in America. And that's a true statement. Nonetheless, with the IRS, they've set something up that can be a benefit in regards to bringing in more of a tax refund or reducing your tax liability. And that benefit is called Earned Income Tax Credit, or EIC, which is Earned Income Credit. And there's a benefit that you can get from your investment income. Okay? So y'all heard it first, y'all. I just wanted to, share that brief knowledge about investment income and how that ties in with EITC, which is Earned Income Tax Credit. Click the link in my bio. Check out my free ebook. Sign up for my free ebook. It's going to be a plethora of knowledge. You're going to see it in my bio. Also, check out my podcast on YouTube, Black Dollar TV. Subscribe. It's going to be a lot of knowledge that y'all going to get and that y'all in store for. Abundance of knowledge. Very powerful. And y'all heard it first, y'all. Tax Pro.